Finance Minister Nirmala Sitharaman's Union Budget speech highlighted the government's kartavyas for the economy and how they will play a critical role in shaping economic growth, financial stability, and everyday decisions for individuals and businesses alike. The Times of India, in association with AU Small Finance Bank, presents Budget Ahead, Learn and Lead, a focused conversation that looks beyond headlines to decode the key budget announcements, economic priorities, and what they mean for India. This session brings expert perspectives to help viewers understand the budget's real impact and navigate the road ahead with clarity and confidence. It's my pleasure to first introduce Mr. Sunil Alagh, who is one of India's most respected business leaders. He is the former managing director of Britannia India and has decades of experience across FMCG, corporate leadership, and board level advisory roles. Second up is Mr. Bipin Sapra, who is the partner and leads EY India's Indirect Tax Policy practice. Before joining EY in 2007, he served as an officer of the Indian Revenue Service, Customs and Indirect Taxes. With over 32 years of experience, he brings deep expertise in indirect tax policy, tax and public policy strategy, and GST law and processes. Finally, Mr. Madan Sabnavis, who is the Chief Economist of Bank of Baroda. He has 38 years of corporate experience and he is a postgraduate in economics from Delhi School of Economics and he has graduated in BA Honours from St. Stephen's College. Welcome, gentlemen. Thank you for joining us on this special session. To begin with, I'll start with Mr. Sunil Alagh. Sir, what is your one biggest takeaway from, Finance Minister Sitharaman's speech, the budget speech, and what is that one thing that stood out for you?
See, the thing that has stood out for me is increase in infrastructure spending. And that's most important because it generates employment and it also keeps the growth economy in rural sector especially growing. And that is most important because what has stood out most important is that infrastructure spending.
Okay. And Mr. Sabnavis, for you, what is that one biggest takeaway from this budget?
No, I think the biggest takeaway has been that the government is sticking to the fiscal prudence path. And the fact that we are really talking of targeting 50% of debt to GDP ratio, I think that is significant. Because while that is a goal which we have, but the route which is going to be followed is by controlling the fiscal deficit ratio. And this time there's been a marginal decline. I'm quite sure we'll be seeing sharper falls in the fiscal deficit ratio, but 4.4 to 4.3% is indicative of the resolution of the government. So this, I think, is the biggest takeaway from the budget.
Okay, and Mr. Sapra, for you?
I think the finance minister has focused on a number of issues. The prime which has been there has been on the building the manufacturing capabilities in the country further to make allow goods which are being manufactured there to be competitive, to be part of the global value chain. There's a clear emphasis on Atmanirbhar and basically strengthening self-reliance and reducing import dependence. So apart from being part of the global value chains, a lot of FTAs are being signed where there would be a focus on goods being imported into the country and the Indian market has to be competitive. Indian manufacturers have to be competitive. In that sense, lowering of the import duties on certain select sectors which are being given a push has been key in this budget. Not only the import duties on inputs, but also on capital goods has for these sectors has been reduced so that goods which can be manufactured in the country are competitive and can be exported out. Basically, the mantra of Make in India for the world continues. So that's one area. So if you really get down into the details of that, we saw biopharma coming out with a 10,000 crore outlay, which is a huge thing. We are going to become a biopharma hub, strengthening the biopharma in manufacture in India. ISM 2.0, the Indian Semiconductor Mission 2.0 has been introduced. Semiconductor is the key factor for all electronic manufacturing, and India has realized a lot by ISM 1.0. And by moving to ISM 2.0, that's where we are strengthening electronic and manufacturing. Similarly, for the ECMS scheme of component manufacturing, the outlay has been increased tremendously to 40,000 crores, and it has been already we have seen a lot of good quality people coming in to participate in that. So overall, the manufacture has been a big area which has been given a push, and not only in these sectors, but the traditional sectors and the sectors which have been really needing support, like textiles. The National Fiber Scheme has been introduced, and there has been a revival of 200 legacy industrial clusters. So the building of ecosystem for manufacturing, I think the Honorable Finance Minister has done a great job in pushing all of that and bringing that together. So my takeaway is manufacturing is the key, apart from energy security and other things which really build into making the products competitive for being part of the global value chains.
Right, right. Talking about the manufacturing focus that you spoke of, Mr. Alagh, so the finance minister mentioned manufacturing being scaled up in seven strategic sectors, right? So, what does this mean for the growth potential and job prospects from an Indian perspective?
See, it has tried to attract the private sector, which has not been spending on capex as much as she would have liked. But in 2025, in 2026, she has given a lot of push to manufacturing, but that is secondary to increasing in infrastructure because it provides employment. In manufacturing, private sector has used AI. Every time it's got productivity increase, it's sacked people. See, the Prime Minister wishes that employment is generated in this country. And therefore, the private sector must now join hands with the government in generating employment because they must not sack people as much as because every quarter they need to announce increased profits. Now, it's not necessary that this is important because by reducing profits marginally, they could not they could increase AI. And see, it's important that we do not go into areas which are increasing profits anymore, and private sector must join hands with the government of India. That look, supply chain, the corridors that have been made for freight movement, the supply chain has improved substantially because in the budget she has announced a number of corridors for freight. And
Right.
that is the most important for supply chain for it to have improved. Bombay and Pune to Hyderabad to somewhere else. But it's not and people have complained about tier one, the metros having high cost of land and everything else. But she says tier two and tier three cities, she's given a lot of money because we must move towards tier two and tier three. And rural economy has got a lot of areas. And what she's concentrated on is reduction she's made a budget which is consistent with the policy of growth. And that's most important is that she's made it consistent. And therefore, we must think of supply chain or anything area like rural areas, tier one, tier two, tier three cities. She's plowed in money. So manufacturing is something which China has come up with immediately. And anyone who comes into India and make in India, he doesn't care, the Prime Minister doesn't care whether the finances or whatever is the money that is required, whether it's international or whether it's domestic, it doesn't matter as long as you make in India.
Right, right, sir. Coming to, so we are talking about investments, but savings is also an important part, and that is where the money comes for in terms of investments in the cycle. So, Mr. Madan Sabnavis, from a savings perspective, a healthy and growing economy requires a specific range of savings rate. And how do you see India placed there? Where do you think we're headed?
See, if we look at India, I think we have this paradox in the country. When I say paradox, we have a situation where we need consumption to increase and we also require savings to increase. Because I think one of the factors which held the economy back was that consumption wasn't increasing. At certain times, it was rural consumption. Other times, it was urban consumption. Now that inflation appears to be under control, we've seen the GST cuts taking place last year, the income tax reductions which were done last year. So all that has helped to push up consumption. Now, the major issue is in terms of savings. Now, what we have seen is that in terms of financial savings, there have been some interesting developments which have taken place. There's one thing of saying physical savings have been going up in the form of houses which have been bought by retail households. So that has not been an issue. But in terms of financial savings, we have seen that there has been some kind of diversion which we have seen from bank deposits to other things like in the capital market. Now, while generally one would tend to associate capital market with the equity market, I mean, the IPOs which have been coming through, we have seen a lot of money going also into the secondary market, into mutual funds, where these savings may not necessarily be used for investment purposes. I'm not saying necessarily used, because even for IPOs, it was saying that around 1/3 is used for repayment of debt. Another 1/3 could be used just for the promoters or the people who are selling off their shares, taking that money. And only 1/3 really goes in for capital expenditure. So in this kind of a situation, I think bank deposits are something which have been affected severely. And we have seen that since I'm working in a bank, the entire banking sector has seen a slow growth in deposits. And I think this is a kind of a concern which is there for us in the economy, because we're talking of a situation where we have taken a number of reforms have been taken by the government. We have seen bank credit now growing. It's becoming a bit more broad-based. Larger companies are also coming into the fray in borrowing. SMEs are borrowing. Retail is borrowing. But we're not having the adequate savings which are there. So as of today, I think there's a lot of support coming from the Reserve Bank of India. And we actually felt that probably there could be some kind of an incentive given by the budget for bank deposits by giving some tax concessions, making the tax rate comparable to what we have on, say, capital gains on equity. But that is something probably which has not been done this time, definitely. And maybe it's been held back for another year or two, which we hope will happen. Because otherwise, we'll have the situation of our current account deficit also turning adverse. Because as economic theory says that the difference between savings and investment is equivalent to your trade surplus or deficit. So we could be running into that kind of problem in future, because as of today, probably we don't have that kind of buoyancy in investment. Our investment rate is still around 30%. It hasn't gone back to the 34, 35% rate which we had earlier. But if you're going to go there, then we'll require financial savings generated within the country. I'm quite sure that the FM is aware of it, and I'm quite sure that the next few budgets would probably also address this issue of how to increase financial savings in the economy.
Right. Mr. Sapra, we're talking about investments, we're talking about the manufacturing sector and availability of capital and everything. So in any healthy growing economy, it is the MSMEs, it is the startup sector that can help be the building blocks apart from the big corporate houses. So, the budget spoke about champion MSMEs and all. So can you just tell us a little more in detail about what has been the focus area for budget in terms of MSMEs?
Who you asking me? Oh, okay. Go ahead.
Yeah. It was heartening to see that the budget this time had an extensive focus on MSMEs. The first and foremost was the introduction of a dedicated small and medium enterprises growth fund of 10,000 crores, which was for incentivizing enterprises on select criteria. A similar fund, which was a Self-Reliant India fund, had been introduced 2 years back and has been very successful. That fund has also been topped up by 2,000 crore for micro enterprises. So in all, by creating such a huge amount of equity support, there is a great support which has been provided to the MSMEs. On the liquidity side, TREDS has been strengthened. It has been mandated that everything which is to be put up on the TRED, that the linking of government e-marketplace and TREDS has been done for the information sharing with financiers, so that there is liquidity available to the small and medium enterprises. The TREDS receivables would be as asset-backed securities. This will help the secondary market improve liquidity and settlement of transactions. There is Guarantee Fund Trust for Micro and Small Enterprises, which was set up in 2000 to operationalize the CGS, or the Credit Guarantee Scheme, to facilitate credit flow to the MSME sector. This budget proposes to introduce a credit guarantee support mechanism through the CGTMSE for invoice discounting on the TREDS platform. So the TREDS platform has been strengthened so that the bills can be discounted through that for the money which is coming from the government for the MSMEs. Apart from that, there is the professional support which has been created by the creation of a cadre of corporate mitras using professional institutes like ICI, ICSI, and ICMAI. The corporate mitras will be accredited professionals operating mostly in Tier 2 and Tier 3 cities, and they will help MSMEs meet compliance requirements at affordable costs. Then there are a lot of other SOPs, but the biggest one of which I feel is for MSMEs to get part of to be able to supply as part of the global value chain, where courier exports till today there was a limit of 10 lakhs, and hence there was a limitation to which goods could be supplied through the e-commerce platforms or through the courier exports. That limit has been done away with, and that would help the entire exports through the e-commerce sector in a very big way. So in all, a lot of schemes, a lot of other things also being done for MSMEs. So then there was a huge focus for MSMEs in this budget.
Right, right, sir. Coming to you, Mr. Alagh, I mean, we are in a world which is increasingly uncertain in terms of, geopolitical issues and supply chain issues and everything. In such a context, and with this focus for manufacturing, what has the budget done to better position India on the global stage in terms of enhancing its competitiveness and being the go-to economy for manufacturing and ensuring a good and robust supply chain for us?
See, we've signed one with the EU, and we've signed a trade deal with the EU. And MSMEs has been where the government has set up MSMEs mitras have been made into areas where you skill the people, that new jobs will be created, and therefore it's the skilling department which is most important. But you cannot compare yourself to China, because China is one man says it and that's the end of it. But here we have a democracy where every government and every year there's a election, and therefore he has to increase employment and yet help MSMEs. Now in Germany, MSMEs account for almost 80 or 85% of their growth, and that is what MSMEs are supposed to do here. And therefore it is important that you skill yourself, and therefore there is institutes which are being created for skilling. And therefore what you've asked me now is like, it's 75% for the year, any budget, and 25% is strategic. Everybody's talked about a strategic plan, but I would say that, look, every 3 months or 4 months, like for instance in November GST was reduced, it could have waited till the 1st of February. Now in February, 1st of February, the election has been X. Now if in 3 or 4 months it requires somebody else to come in, and therefore somebody else to do, then he will come in, because foreign investment is the most important thing that we need, not foreign investment. And therefore he has done in the budget what he's employed, what he has done for foreign investment is to bring people in and to attract them. Now, if that is not attractive enough, then either he will reduce it or increase it. No taxes have been increased except STT, which is somewhere the government doesn't have endless money. So STT is retail, but it's still a cash economy, and therefore whatever is to be paid is to be paid. And therefore, ultimately, the government has done everything, but in 4 months or 5 months, he will review everything in the budget based on what Mr. Trump does, what the international economy does, and everything else will happen.
Okay, Madan sir, coming to you, I mean, the finance minister has spoken about sustaining growth, and there's also been focus on fiscal consolidation and the entire path, the glide path of the fiscal deficit. And then there's also focus on the debt to GDP ratio, which was also something that the economic survey spoke of. So, in all of that, with the limited constraints, they've cut their income tax, GST rates have been cut, the revenue kitty will obviously take a hit. So, how sustainable is this growth momentum at which we are looking to grow consistently?
So if you just go back to last year, I think the kind of shock which we got when the tariff issue came up was quite substantial, and we all had our own projections about how GDP growth could be affected. 0.2 to 0.4% was the position of Bank of Baroda. But 9 months down the line, we have seen that things have been quite different. I think our exporters have behaved quite differently. We've managed to sustain our overall growth in exports, especially to US. There was a lot of front loading done. There was also a lot of rerouting done. There were certain concessions which were given by the importing partners. So on the whole, I think we have withstood this particular shock quite well. And now at this particular point of time, since it looks like that we are having a deal with the United States of America, the tariff rate has already been reduced to 18%. We can only think of positive things happening from here onwards. So last year, I think when the growth estimates all started off at somewhere close to 6.5% to 7%, but it ended with something like 7.4%. Now, if we're looking at the current financial year, economic survey talks of 6.8 to 7.2%. We had a forecast of around 7.5%, which again, I think also took into account the fact that the tariff issue would still not be resolved. But now that it's resolved, I think we'll be moving towards the 7.5% region. So to my mind, the growth number now above 7% is something which is sustainable and something which we'll see happening. Now, if I try to juxtapose this along with the budget to say, okay, what is the budget really doing for this growth process? Because all the tax incentives which had to be given has been given last year, and we cannot expect the government to keep giving more and more tax incentives, because at the end of the day, we need the economy to grow. And this year, we're expecting nominal GDP growth rate to be better than what it was last year, since we had deflationary conditions last year. Now the inflation is going to turn positive. So we're talking of 10% growth. So there are going to be controls over the amount of revenue which can be earned in terms of income tax or corporation tax or GST, because everything gets linked with the GDP growth. So I think the growth impetus which the government has given has been purely on the expenditure side. So I think that is what we need to appreciate. One part is, of course, the capital expenditure which the government has spoken of. We're talking of 12.2 lakh crores. Even if I subtract 2.2 lakh crores going to the states as transfers, we're still talking of around 10 lakh crores. And this is something which has been steadfast in the last few years. And I think that's one of the reasons why our investment ratio has remained in this region of around 30%. We were around 28% 5 years back. We have come to now 30%. But we look at the futuristic way in which the government is looking at it. Let's look at the freight corridors which they have spoken of. They've spoken of waterways. They're talking of the data centers getting in FDI. So the way I look at rare earths, I think that's another thing which has been something which has been talked of a lot. Now we're going to go into our own exploration in certain southern states, I think it is. So what we're really looking at is the government is having a futuristic look as to what are the growth sectors in future. One are, of course, the traditional ones, which we have discussed in terms of what's going to happen to the MSMEs, agriculture. These are the normal subjects which are focused on. But I think what stands out here are the growth sectors, the futuristic sectors, where the delta is going to be much higher in terms of growth in future once we get our act together. I think that is where the government is focused on, so that when we are talking in terms of accelerated growth in the coming years, this is the kind of platform which is there. So when you're talking of 5 trillion economy, 10 trillion economy, Viksit Bharat, all this means that GDP growth has to go in the region of 8 to 9%. The sooner, the better for us. And I think that's the way we should be looking at how future budgets will be working. It's not going to be on the revenue side. There can be a bit of tinkering of customs duties, maybe another round of GST cuts. But on the whole, it'll have to be how the expenditure is being dovetailed towards future growth. And I think that's where the credit in this particular budget lies.
Right, sir. Mr. Bipin, taking forward from what you said about MSMEs, I mean, a lot has been done in the budget. But in terms of ease of doing business, how do we get more startups and MSMEs to be interested in contributing to the Indian economy? And what are the steps that still need to be taken? Some challenges that you can highlight for us in detail.
The ease of doing business has been a important focus for the government for some time, and this budget continues the process of further enhancing ease of doing business, or they mentioned ease of living as a terminology. Basically, with the push of increasing self-reliance, building domestic manufacturing capabilities, with the aim of integrating everything into the manufacturing into the global value chain, and also entering FTA in various jurisdictions. There have been a lot of issues where ease of doing business is required, especially one area where we saw a lot of work being done was on the custom side. The budget has given a roadmap to align the government's this vision with an aim to modernize the customs procedures to facilitate seamless digital purchases, enhance compliance, and lower cost for customers. So the significant steps which have been taken include AI-powered consignment scanning, a proposed integration of multiple regulatory portals into single window systems, and the aim to cut delays, lower cost, and enhance compliance all around on the custom side is basically to facilitate that the goods which are being imported into the country are done at a much lower cost. The transaction costs go down. Uh, the aim to I spoke about the removal of the 10 lakh limit in the e-commerce sector for basically for um, uh, the export the courier exports. So that coupled with easing of return of goods procedure will really boost the e-commerce exports. So overall, a lot of work has been done in various areas to introduce ease of doing business, and there are a lot of measures out there in the budget.
Okay, so I am going to now start the last question with Mr. Sunil Alagh. Mr. Alagh, the global economy is actually facing a lot of disruptions. Apart from the geopolitics of it, there is artificial intelligence, which is making its way into any and every industry and causing disruption in terms of jobs, in terms of the way things are done. In this context and overall with the way the situation is, what is that one reform that you think the government needs to continue focusing on this year? I mean, the Prime Minister has been talking about the Reform Express continuing,
See,
and so what needs to be done?
it's endless amount of money the government does not have, and therefore everybody wants everything. But one area where they could have spent by reducing something on some other area was R&D and innovation, which they've done very little for. And therefore R&D and innovation, research and development and innovation, they must attract more and more that there is going. And ultimately at the end of the day, whether I read Harari's book, and Harari says AI is going to create a whole lot of useless people. A useless, he does not mean useless people, but many people who are unaware of AI and productivity increase and everything else. Now that might take 2 years or take 3 years if the skill development manager is there. And if there's skill development industry which sets up the institutes, which he wants to do.
Right. Mr. Sabnavis, coming to you, I mean, the finance minister said that over 350 reforms have been rolled out. The Prime Minister has spoken of the Reform Express. India is on its way to become the third largest. And as you were talking about, there are numbers of 5 trillion economy, there is 10 trillion economy. So in that road for the next 1 year, till the next budget comes, 2027, what should the government be focusing on?
I think there's one reform which so far has not been taken on, that is in the agricultural sector. Because A, we know in agriculture, 40% of our labor force, or around that kind of number, is actually employed out there. B, India is the largest consumer producer of almost every crop in the world, which means that there is a lot of potential which can be leveraged. So we need to have reforms in which we're able to improve A, productivity, B, marketing. We need to integrate the ENAM, which we have already. So spot trading has to be integrated with futures trading. Now, futures trading has been banned for a number of agricultural commodities. If the pricing power has to be given to the farmer today, we need to revive futures trading, link it with spot trading so that you're able to earn higher incomes. So when we're talking of rural economy, where again, there's no official number, but it's believed around 50% of the rural economy is agriculture, I think we could be having these kind of reforms. So I think commercialization of agriculture should be high on the agenda. How one does it, we've also seen in little bits and pieces, corporate farming has done well, contract farming does work. So maybe we need to give some serious thought on that. And that could be one area which could be taken up in 2026 so that we're able to improve agricultural productivity, improve the incomes of farmers, which actually finally will feed into the demand for the FMCG and consumer products. Because we can't just be relying on all the time on a good monsoon leading to good rural demand. We need to have certain reforms in this area also.
Right. Mr. Bipin Sapra, your concluding remarks on what the next year should focus on from a startup and MSME perspective.
See, my view is that a lot has been done this year in the budget, but a lot needs to be done still. Uh, there are areas which the MSMEs still face, and they are facing problems in terms of the current GST structure. There are areas which the government has to focus on streamlining those the various processes which are there in GST. There's a thought that today, given the aggressive audits, multiple state and central audits which are happening, those there has been a huge talk about for MSMEs, making them virtual audits, making them the interest rates which are required to be paid for various issues, even for borrowing from the markets. There needs to be a concessional rate for MSMEs. And then, while making them competitive, there are still procedural hurdles which are out there which need to be sorted out. And I think you spoke about AI. AI is one area which can be used to for a tremendous advantage for goods which are being, say, exported and are being returned back, which is a big problem in case of e-commerce exports. Those need to be looked at. And then finally, we were looking at there's still a lot of inverted duty structures in the custom side for goods which are being imported. We were looking at a much better rationalization which would take place in the next coming year. That is something which can be looked at so that our goods are much more competitive. Um, while FTAs have eased up the pressure in terms of tariffs in the destination country, but with tariffs going down in our country also, there would be a push for our market to keep our market with our manufacturers and keep that there. There's going to be need that our GST structures and our ease of doing business should be higher so that our products are more competitive in the market.
So, Mr. Alagh, just one final bit, just one line on how you would summarize the budget for us.
See, there's no dearth of saying that, as many of of the panelists have said, they want something done, they want X done, there's a limited amount of money that the government has. And therefore, each year, and how much are they going to spend on what, where are they going to incur the expenditure? When she came out with taxes, she had to raise it. I was wondering where, and it was on SCT that she increased. Now, retail taxes have to go up. There's no question. But therefore, to say that I want this and I want that and I want this and I want that, I'm tired of hearing it. But every year, there's a limited amount of money that she has, unless she cuts into something and increases our taxes further. There is no room at all. And therefore, I have not talked about thousands of crores and X, because the average person doesn't understand thousands of crores are being spent and is being done. It is only in this year that the government has come up with the budget, and it's based itself on growth and therefore on rural demand and on infrastructure and in increasing employment. That's where it has come.
Right, right. Mr. Sapra, for you, one line on the budget.
My takeaway is that this budget is a very nuanced budget, and the Honorable Finance Minister has walked a tightrope between the geopolitical headwinds which were there and the need of the hour to make India competitive, Indian goods competitive in the wake of all of that. And with focusing on manufacturing, betting on MSMEs, and improving the skilling and other sectors, I think the purpose of the budget has been served.
Right, so Mr. Sabnavis, for you.
Yeah, in simple terms, I would say this budget focuses on making money work better.
Okay. Thank you, gentlemen, for your time. As we wrap up today's discussion, one thing is clear that the union budget is not just about numbers, it's about direction, opportunity, and informed decision making. The insights that have been shared by this eminent, panel of experts today is clearly highlighting the importance of staying aware in a dynamic and economic environment. We hope that this conversation has added perspective and helped simplify the key themes that shape this budget. Thank you for joining Budget Ahead, Learn and Lead, presented by the Times of India in association with AU Small Finance Bank.